Welcome to LeonCo and welcome to your weekly financial news. Welcome to LeonCo and welcome to your weekly financial news. And on this week's video, we'll be discussing something that we've talked about in the last couple of weeks, and we are actually discussing in our weekly videos for the topic for the month of May. And that is, how is this perfect storm, or why is this crash or depression, recession building up, but the stock market is still intact? If you've noticed, since this all started, since this wrapping up, since late February, mid-March, we've noticed that the stock market has been conducting itself very different from the reality that we're facing in the economy. You've noticed that in one point in maybe a couple of days, the stock market crashed, but then it started moving up back and back again, and it was more about speculation than from certainties. It was more about hopes, not about facts. And throughout the weeks and more the days go by, as companies have started putting out earnings for their quarters, you've noticed that even though companies have put on not necessarily solid earnings, most of them have not met expectations, and by a long shot, stock market has been not relevant to this reality. And this is something that is concerning, and this is something that most people are looking at it as a spectacle way, because even though the stock market is not necessarily supposed to reflect the economy, the effects that have the economy on the stock market are supposed to be relevant, are supposed to be important. And this is not what is happening in the reality that we're living right now, because even though we have unemployment hitting all-time highs, even though we have small businesses failing, we have big companies going bankrupt, the stock market has not been changed. In reality, the stock market is moving up. There are being, for example, in the SP 500, 3 companies are moving it. 3 companies that compound the 25% of the SP 500 from Google, Apple, and others are rallying up this SP 500, while the other companies in the SP 500 are doing poorly. And this does not reflect the reality of the economy. So what does this mean on the long run? Well, this can be an anomaly that we are living in this day and time. This is not going to be the reality. The stock market cannot sustain this anomaly, this irreality from the reality of the economy that we're facing. Because if the unemployment keeps on going high, if people lose their jobs, if people lose their homes, this is going to have a big, significant impact in the stock market, directly and indirectly, because pension funds are going to collapse. People are going to start to sell their investments. And all of this selling, all of this money losing from the everyday people and from people that are dedicated to investments is going to affect directly the stock market. And if this continues, there is going to be a significant switch off from what is the economy and how the stock market works. Because the stock market is starting to work just solely on speculation and hopes of things that happen, and it's not being backed up with the reality of the economy. So this is something that you should keep in mind. If you're an investor, you should use this as a tool in favor for your future investments. And if you are not really in the market to be risky or to be adventurous in the stock market, this is your opportunity to start moving your assets to more safer things. So this has been your weekly financial news. As always, everybody, stay safe, stay healthy, but always remember to have that king mentality.